This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. And you know what? That is often the best kind of opportunity. An opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Omnicom Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi, everyone. This is Mathis Connor with Omnicom Management Group, and this is the Best Stocks to Buy podcast. Today is Sunday, November 25th, 2018, and this week we're going to look at the best dividend stock to buy right now. On to our opening slide. It's called The Setup and the Approach. And the key objective of this podcast is to present to you a high probability upside potential stock. The key tool we use is a financial model, a proprietary tool that we developed that uses multiple valuation approaches across 6,000 stocks that we review every week. So you're not getting the view that is driven by some sensational headline and some popular publication focused on increasing readership, but simply based on the best investment opportunity we could find for you. An easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, we truly viewed creating such a model as daunting, but I believed I was well prepared for the challenge. I have computer programming experience as an engineer and over $15 billion of transaction experience as a banker. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, our model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. Now, a point worth remembering is that these views are based on today. An unforeseen economic report or a regional conflict or revised policy can change these expectations tomorrow. Benefit of using a professional money manager like Omnicom Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is a reason for concern. And now, so what did our financial model find for you this week? Well, we found a company that is in the advertising industry. Here's our next slide called Industry Overview. There have been four big advertising agencies which have maintained market share supremacy for decades. They're called WPP, Omnicom, Interpublic, and Publix Group. However, the rise of the FANG companies, basically Facebook, Amazon, Apple, and Netflix, and Alphabet, who have entered the advertising arena, have become a force to be reckoned with now and present a clear and present threat to the incumbent market leaders. So here are the 10 largest competitors by market cap in the advertising industry. Omnicom Group, WPP, CDK Global, Interpublic Group, Lamar Advertising, National Cine Media, Boston Omaha, R.R. Donnelly & Sons, and Clear Channel Outdoor. Now, some of the growth drivers in the industry right now are contextual / personal advertising. That's basically targeted advertising. Ads served by automated systems, also driving growth. And digital advertising from the FANG companies. That's Facebook, Apple, Amazon, Netflix, and Google. The industry challenges to the industry. Markets in North America have become saturated with limited growth, while there is growth continuing in Europe, Asia Pacific, the Middle East, and Latin America. Cord cutting with the cable companies and content streaming is expected to cause drops in television advertising spending. And another challenge is that increasing reliance on mobile phones and tablets is expected to drive growth in mobile advertising. And now for the big reveal, the best dividend stock to buy right now is a company called Omnicom Group. The ticker symbol is OMC, and we see their 6-month upside potential at 12%. Plus, they pay a healthy dividend, as we'll get to in a moment. On to the quick facts slide. Omnicom Group Incorporated, the second largest advertising company in terms of worldwide billings, is composed of BBDO Worldwide, DDB Needham Worldwide, and TBWA Worldwide. These are sub-brands, along with the Diversified Agency Services Group, which specializes in marketing communications. Sales outside the United States, outside of North America, total 43% of their revenues. The website for the company is www.omnicomgroup, that's OMNICOM group.com. The company is headquartered in Atlanta, Georgia. They were founded in 1944, and the number of employees that they have total 74,900. On to the metrics slide. Over the last 12 months, the revenues for Omnicom Group totaled $15.4 billion. So this is a sizable company. The net income over the last 12 months was $1.2 billion, and their cash from operations totaled $1.9 billion. The operating margins for 2018 are tracking to be 15.0%, and for 2019, they're expected to also hold steady at 15.0%. On to valuation metrics. The trailing PE ratio right now stands at 14.7, and the forward PE ratio is at 13.1. And that relationship implies that earnings are expected to increase over the next year. The PEG ratio stands at 2.0. The price-to-sales ratio is at 1.1. The price-to-book ratio is at 7.1. And the enterprise value to EBITDA ratio stands at 8.9. The dividend yield, which is pretty attractive right now, stands at 3.1%. So this is a very large company paying a healthy dividend that has strong market share and strong international sales. The average dividend payout ratio is 43%. That means the company on average pays out 43% of their income every year. On to the price chart. The stock price for Omnicom has not changed too much over the past year. About a year ago, it was at $70. And now it's about $76. Basically, the stock had advanced as high as $77.50 back in July, but there was a pullback in the stock price due to the second quarter revenue results. They just fell short of expectations. The next slide is called Looking Back and Looking Forward. Looking back, North America growth is essentially flat, with the growth in the advertising industry coming from international markets. The company acquired a majority stake in the company called Credera. Credera's consulting and marketing technology solutions is expected to complement its existing operations. Additionally, looking back, the company acquired a majority interest in a company called Levo Digital, an Australian marketing services and technology business. The acquisition is intended to strengthen its Australian area business offerings. Looking forward, it's pretty straightforward. Corporate tax cuts are expected to drive up client ad spending. And additionally, the company is offering new platforms. One's called Omni, which is a one-stop shop for agencies and clients to create and plan and execute campaigns using tons of third-party data. On to the next slide. It's called the Why Now, the Bull Rationale. We expect the company's stock to increase because over the next year, we see increasing sales per share. Additionally, we see the pressure on the stock to increase because of low valuation metrics right now and in the future. And additionally, we see the stock price pressure to increase due to a continuation and share buybacks. On to the next slide, the summary slide. The financial statement quality of Omnicom is very good. The net profit trend has been improving. The price pattern trend, as we've mentioned, has been flat. But the industry outlook due to international markets we see as positive. Similarly, the overall market outlook we continue to see as positive. The recent closing price for Omnicom was $75.70, and we see a 6-month price target for the stock of $85.20, giving the company a 6-month upside potential of 12%, also with a very healthy dividend of 3.1%. So it's for all of these reasons that we believe that Omnicom Group is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Conner Management Group. Conner Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. Our special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward-thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connermg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right. Have a good week.